The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now,
everyone, Basil Chapman on this 4th day of October. My pleasure to be here Monday through Friday, noon till 1 p.m. Eastern Time, 877-927-6648. So, the reason why for subscribers to my opening call, we changed posture this morning. We actually went short. The Dow is for three reasons. One is in the 120-minute chart, you can see how many Chapman Wave fives there are to the downside and a peak D in the Chapman Wave. Oh, maybe I should do this just in case there are people that are tuning in for the first time. Let me see if I can find it. I should have had it already. There it is. It's easy enough. In the Chapman Wave methodology, what we like to do is to find the lowest low bar and merely count each successively higher peak above it, label them alphabetically, in sequence, peak A, the next higher leg starts a leg B, becomes a floating letter until it becomes a peak, and that becomes B, and then 1 penny above B starts leg C. When that becomes a peak, it becomes peak C. Fourth highest peak is the fourth highest peak of D, A, B, C, D. That's where other things can happen. I had a webinar to show how many times we've seen Ds become quite devastating pullbacks, but there are also times where they become instant restarts. So it's the analysis of that particular point at the fourth highest point, and you can go E, F, and G. Not the point here. Point here is that we went to that D. I was still looking at the MACD, the moving average convergence divergence, as being strong. The stochastic was very strong at about 91%. And then I said, well, based on the Chapman Wave methodology and expecting a Chapman Wave 5, possibly a leg E, I like to put them together, we're going to hold off doing anything. And lo and behold, we got that E, got a doji candle in the 120-minute chart after the 26,951 all-time high. Under 27,000. That 27,000, I think, is going to be a really important millennial level that we monitor over this year into next year for many reasons. Meantime, back at the ranch, that's where we were. And I said, the MACD is so strong and the stochastic is so strong that unless we have a very sharp pullback, that MACD can stay, and the daily chart was even stronger. And here we are down 256 points at 26,572 in the automated Chapman Wave projections. The support is now at 26,454. Above that, there should be some support. We'll see what happens. But this is exactly the concern I had, that if we did not grab a short position, a timely short position, it makes it really hard to get back in because these turnarounds have just been so strong. And not only that, look at this. The turnaround here was a gap up. Look, the turnaround here was a gap down. It's vicious. This is one of the most vicious cycles I've seen in terms of preparing an entry point and an exit point and putting in stops, because you can get it perfectly correct, but it's more at a low than a high, and then there's a pop-up, and intraday it could fall back below, and it can stop you out. So a lot of things are going on here. Let me now go to the regular charts, and we'll try to get this done quickly. In the Dow, this is a leg E, and it's gone to a peak E if there's no new high. I doubt whether we can get to 26,952 today. I don't think it's going to be possible. But look, we're only just now testing the 9-period exponential moving average, getting closer to the 14-period moving average in the daily chart at 26,499. This is just the start of a move. But look, the MACD is failing. Stochastic is fading. It's at 82% and good, but it is much lower than it was at that peak D that was made just the other day at 26,769. And once again, I've got to say that weekly chart is still very strong, as is the monthly. Now let's run these quickly. S&P. Right now, the S&P is down very sharply. It is down 27. That was a peak E that was made. It's now in a sell mode. The Dow daily is only in a sell signal. It hasn't even gone to a sell mode, but the S&P is in a sell mode in the daily. Possible double top, peak G or C1, C2. In the weekly, the technicals are still pretty strong, as are the monthly technicals. Go to the QQQs. Peak E top. Excuse me, I mentioned that yesterday. 187.53, trading right now at 182.48. Really sharp, but this has gone to a sell signal and a sell mode almost in one fell swoop. However, look, there's a support line right here. So how we deal with that, not we, how the Qs deal with that, the index 100 trading vehicle is going to be very important because it has to go under 182, it has to close under 182 to really confirm that this is going to impact the weekly chart, which has a support level of 180.70 next. Monthly chart is still very good, but here the technicals in the weekly chart of the QQQs, not good at all. IWM, that's the Russell 2000 ETF, trading down 1.24%, down 2.03 at 163.94. This is a leg G/C in the weekly chart, and the daily chart is only a leg A and a peak G top in the weekly chart. Monthly chart is just now starting to be impacted, but nothing has really changed there. We have to wait for the whole month, of course. Now let's go to gold, because gold was up quite sharply earlier on. It's now up $1.80 at 1207.7. You see, the way I'm looking at this, if there is international chaos because of markets, etc., then somehow or other gold should become a harbinger of some kind of safety. It isn't doing that now. Look, the weekly chart is still lousy. The gold is down, up $1.70, and silver is now down 0.04 at 12.62. Made that peak E top I was talking about yesterday, pulling back. It better hold 14.48. Otherwise, it's a real problem. 14.40. If it goes below that, it's a real problem. High-grade copper was doing okay. Now it's pulling back, making a potential double top towards the lower end of the range. It is down a little bit at 2.80. If it takes out 2.75 in the next week, that is really ugly action. Upside has 2.94, 200-period moving average in the weekly. Okay, this is going to be very important. The dollar. The dollar is down 3 cents at 95.73. I still like it. 87% in the stochastic. It's even got a potential, I'll know very soon, whether it's got what I call a Chapman wave squash between the MACD turning up with the price and the stochastic turning up and going over 80% in such a quick move. I think it has the potential for a squash, which says that the dollar could go to, this is now a double top at 96.12. So haven't even made a peak A, it's still a leg A. Usually it can go to a B and a C quite quickly, and then it takes its time to get to a D, but it needs to hold 95.20 on the short. It's got a problem, but so far it is. And we're only getting started. Like Dow's down 270. I'll be.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back, and now we're looking at the dollar just to finish this up. 95.77 right now, and it is holding quite well, but it's unchanged. And that says to me that we've got to keep our eye on the dollar because there's an aberrational phase going on right now. The aberrational phase says that the dollar is strongish. I'm saying ish right now because it's not as strong as it was at 97, 96.99, but it is strongish. It should really be weakening, and gold should really be soaring if this was, oh man, got to find the right term for this. International chaos is not the word. It has to be very selective. It's really financial chaos. Then I would see gold going very strong to the upside. And if you look at the XLF is up. Not as up as it was earlier on. Now it's only up 3 cents. Someone was thinking, oh man, rates are going higher. Financials are going to really be, it's going to be impressive. Oh, it was impressive at 28.34, the high of the day, except now it's at 27.98. Not good action at all. And that's a real concern because we're slowly losing all these different sectors that become the alternative pop-up phases in a down move. We do, for my subscribers, we're fortunate so far. The day is young. It's going to change, I'm sure, by the end of the day at this rate. But we do have certain sectors that we've bought, very low-priced issues and others, but low-priced that are actually up. Both of them were up over 2% earlier today. Now one is up 1.5%. The other's just gone negative a little bit. But those are I'm trying to be under the radar. I think it's really important to try to focus on what could be a factor. I'm going to just go political for a moment here, geopolitical. All that talk for a year and a half, 2 years about Russia this and Russia that, and I keep saying, Russia? Why are we even talking about Russia? It's just it's like it's just a little small part of something, it's like a gangster within a city. No, that's not the issue. What I said is what's going to happen is what happens if China, with its huge financial force and our tie into to China, what if there is some real political discontent. But it isn't just that. Now there are stories, I'm not sure if they're rumors or if it's true, about something like 30 major companies in the United States. Little chips were put into the computers that have been garnering information. To me, that is, if that is true, that is really one of the biggest issues. Can you imagine Boeing? Let's look at Boeing right now. Imagine if China is going to start copying all the information from Boeing, and in 3 years' time, China is developing a Boeing-type aircraft. Hey, that's an issue. Boeing right now is down 5.5 at 386 peak D. I think this could be the first time that there could be something deeper because it's a leg D in the weekly chart, although the MACD just crossed positive. All I'm going to say is that at 386, if you see Boeing trading under 368 in the next 2 weeks, that's a real problem. All right, so I just wanted to get that out the way to say I didn't think it was Russia. I think it's China for other reasons and strategic reasons. These are not just kind of want to, you know, well, okay. So that's Boeing. Now we're going to go just back to the TLT. Did I do TLT? No, TLT making a little doji candle at 114.09. Look at that monthly chart, how it's broken down. Look how long I've been focusing on this to say that in the monthly chart, look at this monthly chart of the, let's go to the TYX for a change. This is the 30-year. Finally, leg E in the monthly chart. It's the first leg E we've had in a monthly chart for 30-something years, but it is in the Chapman wave inside track repellent zone with the MACD good and the stochastic improving at 73% in the monthly chart. Let me do this. Very, very long-term chart. Look at that. From the high that was made back in November of 1994, there's been this down channel that's been just persistent in making lower lows and lower highs. And all of a sudden, we're going into this inside track repellent zone, but that's not the issue because it used to be the 30-year that was so important, but over the last many years, it's the 10-year Treasury note interest rate, the TNX, and that's in a leg D outside the 31-year bear market or whatever it is. It's in leg D. The MACD is good. Stochastic's at 84%. Now let me make it a little bit. Look at this. We are so close at 31.89. We are within an eye blink of the 33.27 200-period exponential moving average. When was the last time you even heard me talk about the 200-period exponential moving average? Well, I did in 2007 because it hit the upper trend line resistance and then turned down at peak D. It made a very quick A to B to C to D to E to F back in January, I think it was, of 2000. But from the October 1987 high, this green line, the dashed upper green line, that has been a tremendous repellent zone. And here we are treating it as a support level. So the 2880s is going to be the support. This is very, very interesting because interesting, meaning INT, ERS, T, dash, ING, because the rates, this is only a leg C in the daily chart of the TNX at 31.87 of 26, leg G/C. I think it's actually a C, and this could go even higher in the weekly chart. And look at that monthly chart. Look at the technicals, how strong they are. So it's going to have to be something, some really, I don't know what it is. And, you know, I mentioned, I think it was a year ago, I said, or maybe 8 months ago, I said, I was surprised to see that it was Japan that had almost all our bonds, and that China had gotten rid of a huge chunk of our bonds, but they still have bonds and they're still selling. Is it Japan maybe that's selling our bonds? All I know is that rates are screaming higher. Crude oil, peak C being made today. That suggests to me that we could have another little pop up to 70, to maybe the 76s, and then we might see a turnaround. We don't even have to do that. But I do think there's enough energy to say we could still have one more pop-up to the upside. There's no way that I can make an alternate count. This is a peak C. I think we will go to a D. But the candle being formed right now with this long wick in the weekly chart says, whew, that's quite a pullback. But wait a minute. It's the monthly chart that's in leg E. Hey, just like the interest rates. leg E broken out. MACD is good. Stochastics flat for the whole of 2018, up in the 90 area, 88 to 90s. This is very strong. Now, I needed to have a look at, I wanted to look at like Royal Gold. I just wanted to see Royal Gold, of course, is one of the great gold companies. It's not doing much. It's down 15 cents at 76.26, made a peak C1, C2, C3, and it's pulling back. This weekly chart is a big key, because if it breaks 74 in the next 2 weeks, that's just not good at all for gold. But if it starts to trade from 76.23 right now into the 80 area, I have to consider that the dollar's not going to go all that far in this phase, and that gold will become a very important medium. I'm treating it as if RGLD, Royal Gold, is that important. I think it is. I'll be right back. That was on 334. Basil Chapman. Now, you can give me a call at 877-927-6648. We've got a lot of questions coming in. I don't remember that.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Question about Boeing. Yeah, so Boeing is down 1.44%. That's the question. The UTX, which we still own, I say we've got to be a little careful here. It should be pulling back. It is pulling back. How United Technologies handles this particular pullback and when it starts to move back up again, it's going to be really important. It's at 139, hit 144. That's 5 points just 2 weeks ago. All I can say is that we're still long from the 119s. I I thought about it. I could still do it. I'm getting back into the whole thing with puts and calls, options. Haven't done it for years. I've just been practicing doing some things. So I might suggest some way of positioning yourself for United Technologies. I'd like to actually try to keep it. What was the next one? Caterpillar. Yep, Caterpillar is down 2.36. Oh, it made that peak D. It made leg D yesterday, gapped up to the D, needed the D in the Chapman wave methodology. Now it's got the D, and now it's pulling back. Watch this very closely. It's a very nice move off the low, back at 130, actually just under, and it all went all the way to 159. Hey, that is really impressive. Can have a pullback, deserves a pullback. Let's see what happens here. Next question is EEM. Yep, let's see if the EEM is doing anything. Oops, EM typing into the little rectangle there in TradeStation. There you are, EM. Down $1.13. I said, please be careful. This is not the area you want to be in. Not now. The United States economy is the best. Stick with the Dow type area, but right now, just be very careful. I said yesterday, raise cash. Very important. EWZ. Is that moving? Oh, look at that. Pulled back from the 200-period moving average. Leg C now, peak C. This is Brazil E. This is the iShares Brazil index. Just be careful. It's at 35.89, holding quite nicely. You don't want it to go under 34, and it's at 35.89 right now. Next question is, did that IYR? So I mentioned it yesterday and the day before. I'll do it again. IYR is down 0.93. It's down 72 cents at 77.98. This is not a good sign, and I had no idea what to call this. I called it a peak A. In fact, this goes under one of the most unusual chart formations that out of the hundreds and hundreds and hundreds of thousands of charts I've looked at over the years. This is probably one of the most fascinating. That's all it is. I wouldn't be touching it right now. IYR, US REITs. I did that. I did that. XAL, oh my, let's have a look at XAL. XAL is down $1.55. What a smash there in the monthly chart. It's got the dreaded H pattern, lowercase H pattern at 102.34. Just be careful. I wouldn't be dealing with airlines right now. You just got to be real careful. XLI, that is the industrials. That's unlike the Dow, which is called the Dow Industrials. The XLI is an ETF of the S&P Select Industrials. I think it's probably closer to real industrials. Made that peak E now. This is going to be, maybe tomorrow I'll do a little, tomorrow Friday, good. If someone remind me, Technical Friday, I'll show the right shoulder failure pattern, which looks like the lowercase h pattern. Holding not bad at 79.02, down 58 cents. If it closes under 78, it's a real problem. But if it hangs around, yeah, that's good. And if it goes to 80.20, hey, I'd say that's really good. It's one sector that's doing quite nicely. Oh, so I talk about my cash index. What is that? It's CTAS. No, it's CASH. CTAS is Cintas Core. Look at this, a lower low today after hitting a 217.34 less than a month ago. A peak F in the daily, peak E in the weekly, a leg E in the monthly. It is trading at 195. This is the deepest correction it has ever had, certainly point-wise. This is not a good sign. Let's go to Marriott here. Marriott is down 3 points. Yeah, they got a strike going on in Boston. Oh, that made a peak F. I didn't finish this up. Made a peak F in the Chapman Wave Daily. Oh, look at that. What a beautiful option play that would have been. Trading in the 133s now. It's at 121. It's got a real problem, and that's part of the economy. You got to be careful. Cintas, Amazon was giving me sell signals the other day. Whoa, look at that, down 42 at 1910. Not a good sign. The weekly chart is starting to deteriorate finally. The MACD and stochastic are down, but the price is still holding above 1870. You see Amazon close in the 1865 or lower area, and that is going to be a serious monthly chart that we're looking at. Okay, we got that. Oh, Nikkei. Oh, no, not Nikkei. Nike. Why not? Nike. Nike is the a sport and sportwear company. Made a peak C1, C2 double top. right there at 86 something, 86.04, trading right now at 80.70. Looks like this could peak in the monthly is a possibility. Just watch this real closely. Got that. Oh, HGX, that was the housing. Look at that, plunges 279, down 5 points at 279. Oh man, the housing this is just not good at all. Really, this is getting me very worried. So you had cash. C was Cintas, A is Amazon, S is the SPY. We did that. We did S&P. Let's do the SPY. Double top, now it's in leg. C to the downside. Sell mode in the daily. Nothing yet in the weekly. And H is Home Depot. Got that horrible story with Home Depot that I'm dealing with right now. I just cannot believe how they're selling things and they aren't able to cope with the number of sales. It's a really sad situation. Wonderful that they're making that kind of money, but something's going on here that is not good. They can't manage what's going on. That's the issue. This is just anecdotal. This is not nationwide, just anecdotal. Home Depot down 4.5 points at 199.10, 215 on the 12th of September. Here it is, October the 4th. It's at 199. This is not good action at all. Ooh, some are getting the feeling that I'm looking at this and saying, oops, not a good scene. All right. Oh, a quick question about junk. Yeah, JNK. JNK is this is the Spider Barclays high yield, made a peak E back in January in the 37.50 area, trading right now at 35.73. You think that's not much? This means that you've lost capital. 2 points. It's about 8% of capital, so you might be getting a nice dividend, but boy, that capital's going to kill you. Okay. Now, a couple of things that I want you to do at this particular point. I've gone through a whole bunch of those questions. I want to look at this, and I'm going to now answer the question that I was asked about by Z in the den, the Tiger Den, just the other day. And I said, I just needed 2 days. I think I can answer you, but until I see the proof, the evidence, I'm not going to do it. Now I'm saying I'm in step 2. Step 3 is really the issue. Step 2 is in the S&P. We've got from the 2940.41 high of September the 21st, we made a peak E, made a cup formation double top. If you break 1/3 to a half of a cup formation to the downside, there's a real good chance you're going to test the low. If you take out the low, there's a real good chance you're going to get a 1-to-1 of the distance 2940 to 2940 to 2903.40. So that's 37 points, and then it rallies to 37. So 2902 would have been your 1-to-1 on the most conservative way of looking at this. But if it's from the bottom, we can go down to 282, 2008, 82, 228. 17.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So at all-time highs, it's really, I can go back literally thousands of charts, and on a weekly basis at all-time highs, it's very unusual to make a double top like this. So I'm going to just, for the bearishness we're looking at, and I'm coming back to the S&P in a moment, I just want you to show you, look, the XRT, this is the retail area, has gone from 53 to 48, just like that. Bam, look at that monthly chart. 2 months, it's just plunged. And that to me is not a good sign, together with Cintas, Home Depot, all the consumer-related areas. So now let me go back to the S&P, and I'm going to show something that might turn out to be something that you can at least lock in and say, oh, okay, now I know kind of how to negotiate and look at the bigger perspective. With all that's going on, down almost a percentage at one point today, now down 28 in the S&P, you've got this pattern which says you've got a cup formation, you've got a Chapman wave breakout that went to an E, pulls back. I said to subscribers yesterday in that 120-minute chart, any pullback from E is bound to test that leg D top, because that's what happens in Chapman wave cup and ladle breakout. This is the same thing. But then you had the cup formation, the second cup formation, which so far has failed because it's gone underneath that trough that was made back around the 25th. So now what we're looking at is the monthly chart. The MACD is only turned down a little bit. The histogram is still positive. The stochastic's flat at 90%. The on-balance volume has turned down sharply for 3 weeks, but it hasn't affected the price up until this very moment. And the relative strength is still pretty darn good at about 62%. It is turning down. And the monthly chart says, I'm still holding pretty darn well. Now I want to put that together with this particular index right here. Look at the VIX index, up 3.04 at 14.65, up 26% in a day. To me, that's too much too soon. However, when you get the dominoes falling one by one by one, you can't exclude the fact that the VIX index could be saying, you know what, I've broken out. Yesterday, you make an all-time high. So the VIX is actually dependent on the S&P. So yesterday you missed, or just a few days ago, you missed by fractions, making an all-time high. And now all of a sudden, I'm back in the 14.65 mid-teens in how many hours? 3.5 hours, less than 3.5 hours. To me, that's too much. And that's saying to me, there could still be bounces coming up, but I think it's lower highs and lower lows, and that the emotional impact right now, the surprise. Can you imagine many portfolio managers say, oh man, that was great. The Dow's holding, yeah, the index pulled back a little bit. IWM is a stinker. I'm not even interested in it. All of a sudden, everything's coming down. This is where I say, this is the Granville 90-something% of indexes are falling. But for 3 hours, by the end of the day, anything can happen. So all I'm saying is that we went short. We aren't massively short. We've begun the process. And I'm also going to wait to see how the instruments that we have that are still holding really well, the ones that we just got into and that are still up very nicely. Am I going to give up profits there, or are they going to turn around and say, you know what, we are under the radar. We still see some benefit to our particular status right now, and that don't get excited because we could be moving higher as the general market moves lower. So I'm watching the VIX. If the VIX starts to trade, today's Thursday, forget about Friday. If on Tuesday, the volatility index is still in the teens, 13 is not good enough. I'd say if it's still in the 1380 or higher area, that is going to be the most significant thing we've seen in a long time. Then it could be speed. Then there could be a real strong counter-trend rally. But as we get into the election, look, it isn't just Republicans against Democrats and Democrats against Republicans. Now what you've got is you've got male versus female. I mean, we are getting down to such specificity that you just have to say to yourself, where is this going to go to? Can you imagine how many young kids, because of their parents, are being ostracized at school for a particular belief? It's just a belief. It's not, maybe they're not practicing, or just, this is kind of what they believe and they mention it. Can you imagine what's going on in the schools, especially the schools these days? I have to tell you that this kind of interscene kind of action that we're looking at, this is not good. And it's against the construct of the country to have this kind of, yes, diversity. I've said this as long as I've been here. I said, I love to see the Republicans come in. Then I want to see the Democrats come in. And then when they've extended their stay, I want to see the Republicans come back. As long as we swing from the left to the right and we don't stay in one direction, that's the way that I love the country to be. It's just a personal thing. Could be comparing, I'm still a foreigner, even though I've been here many, many decades. A lot of elections, a lot of things that I've seen. I like to see thought processes go on. And this is kind of what you're seeing in the market right now. It's the them and us, the IWM against the Dow. All of a sudden, the Dow is down 0.90. The S&P is 0.94. And what do you got the QQQs at? The QQQs, which are stuck in the middle, are down 1.96, almost 2%. And this is what we're looking at in the marketplace. And that's the reason why I've been saying, I know the market's gone up. I'm personally upset because it was such an easy thing to do ages ago, just to say, hey, we're going to buy the diamonds. And until I read about skyscrapers in the United States being the world's tallest building or something like that, where I get a major signal, stay long. But I still look at trading positions. It's just the way I am. And I still think we're going to get a pretty severe pullback. It might be 2 or 3 pullbacks. In the end, it might not be that much in percentage terms, but if you have maybe 3 9%ers, I mean, that adds up in a while, because that means you're starting to whittle away at some of the leaders who really start to see prices deteriorate. And that's really what I'm looking at. So before I get too carried away, let me go back to the S&P, because I think this is a question that a lot of people, certainly me, I'm wanting to know what can happen. And I'd said to subscribers, we have to have speed, because if it's just a little mini pullback, the MACD and stochastic and the weekly chart are just going to say, why are you wasting your time even thinking of going short? I'm going to be back to long in just days. This is different, because you start to see a breakdown that says, because of the speed and the power of the down move, even if there are bounces, if we start to make higher lows and higher highs in the S&P, that means that the 2882 level is the 9-period moving average in the weekly, the green line, and the black line is the 28.59 level of the 14 period. We are way above that, and the monthly chart is still good. So it's speed, it's price, and I would not be surprised if in the S&P eventually getting to 28.59, we still have pretty decent bounces to confuse everybody as we make lower highs and lower lows. So I think I'm beginning to answer your question. Tomorrow's Technical Friday. Today's close will help me talk about the weekly chart, what I can talk about in terms of projections, upside and downside. Hey, I'll be right back for the final segment. I think I've covered almost every question I got today. Yep. Be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
So I wanted to do this quickly. I just got Paul sent an email. Actually, I got a whole bunch, but I'm going to go to Paul. I took a short here at round number 20 and the double top on the weekly. My target is 16. How would you look at this trade? CTAS filling the gap we spoke about last week. The market is getting very interesting. Always very appreciative of your expert analysis. Oh, well, thank you, Paul. Now I'm in trouble. Yeah, so this has made a leg C. There's no other way I can count this. I'm going to try to do it again because of the huge gap. But it is a leg C, and it's close. It's now at the low end of this doji candle of a leg C. The MACD is good. The stochastic is at 88%. Paul, I'm going to say to you, I think you're going to turn out to be correct, but don't be surprised if there's one more little pop-up into the 21s. I've got round number. I don't have a round number. I've got 20.50 as the high. So as a short, I think they're better placed to be on the short side. But if you are short, I would just say look, if you're in somewhere close to 20, don't be a hero. There's a story here, and it's spiked and held and went to higher highs on the story. Be careful, because if it goes over 20.50, that'll be a leg deep, but it better the very next session. It's got to really tank. You need speed. Like it went upside, you need speed on the downside. Don't be a hero. You'll have another chance to short this. I don't see it as a short. Actually, I see it as a possible buy if it can pull back to the 15, 50, 14, 60 area and hold steady. That, you know, I'm just because of the story. That's all. So you might have timed it perfectly, but you wanted this to work really quickly. Okay, let me just go back again. I'd said that the VIX index, I don't like when I see that. We've seen this three times, at least three times this year. We're just almost off the top. Within a day, the VIX powers to the upside. If the VIX stays above 14.60, 65 or something by the end of the day, or even goes higher, you want to see that stay in the mid-teens all the way through Friday and Monday with the market pulling back. I want to see a minus 350 down close today. I want to see the S&P down 38 points. Then I'm going to say to you, you know what? I think we've set the stage for a really volatile October with lower highs and lower lows. Tomorrow I'll start talking more precisely about numbers that I'm looking at. Just be real careful. I said raise cash for the last couple of weeks. I still think raising cash is a strategy. It's not a defensive way. It's a strategy. Building money to be able to buy the next major pullback.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.